Hi, it's Katrina with Katrina and the team. We are realtors who are making a positive impact in our community. In this video, I will be talking with Amurao with DLC Canadian Mortgage Experts about ways to come up with down payment for your purchase as a first-time home buyer. Today we are here with Amurao with DLC Canadian Mortgage Experts. He was recently named as one of the top 75 mortgage brokers in Canada. Welcome, Christian.
Thank you.
Christian, tell us about yourself.
Yeah, I'm a mortgage broker. I work with DLC Canadian Mortgage Experts, and I've been a licensed mortgage broker for about 13 years now. And also married with 2 kids, and loving what I do.
One of the most challenging parts when it comes to buying a property these days is coming up with a down payment. Can you share with us 3 different ways that we can come up with a down payment?
The top 3 that I would say would be, one would be the automatic savings. The second one is the RRSP, also known as the Registered Retirement Savings Plan. And then the third one would be gifts or inheritance.
Tell us more about the automatic savings.
Okay, automatic savings is something that you can actually set up with your bank. And what it does is basically every time you get a payroll deposit or your income from your employer, they can automatically transfer a portion of your gross income to a savings account that they can set up for you as well, free of charge.
That's pretty good. You'll have more money before you even know it, because if you make it automatic, you wouldn't even realize it's already out. One of the other things that we advise our clients is actually make another thing automatic, which is practicing for a mortgage payment. So what I'm saying is, let's just say you're renting right now and your rent is $800. I don't know where you can rent for $800 these days, but let's pretend it's $800. And should you buy a house today, your mortgage payment may be $1,600. And if you think you can afford a $1,600 payment, if your budget allows for it, why don't you practice that $1,600 mortgage payment now? So $800 goes to your rent, to your landlord, and then the other $800, you pretend you're paying your mortgage now, so automatically on the first of each month, $800 goes to your savings account, and before you know it, you've already saved up, and you're now used to making a $1,600 mortgage payment. Is that right?
That is correct.
Okay, so now tell us more about RRSP for down payment.
Okay, RRSP withdrawal for down payment under the first-time home buyer program. It's actually called the Homebuyer's Plan program. This allows you or someone who's first-time home buyer to withdraw their RRSP without being taxed.
What is the maximum amount that a first-time home buyer can withdraw from their RRSP plan?
It's a great question. If someone is buying a home and they're a qualified first-time home buyer, they can withdraw up to $25,000 per person. So if there's a couple buying a home together, they can each withdraw $25,000 in a total of $50,000.
For the purchase of that one property.
Correct.
So tell us more about what's defined as a first-time home buyer in the Home Buyer's Plan program.
Under the Home Buyer's Plan program, you're allowed to withdraw your RRSP as a first-time home buyer without being taxed under 2 conditions, either or actually. A, if you've never owned a home anywhere in the world, or if you've been renting for at least 4 years, then you are eligible to withdraw your RRSP as a down payment.
Without being taxed.
Correct.
And what's the repayment program? So the Home Buyer's Plan, of course, it's an RRSP, and RRSP is Registered Retirement Savings Plan. We are supposed to use these funds for our retirement, but we are allowed to withdraw these funds to use as a down payment for the purchase of a home. Now, one of the common misconceptions or negative things that I hear when it comes to RRSPs is that, well, yeah, it's my money, but I have to repay it? What do you mean? Tell us more about this.
The repayment rule is actually, if we break it down into a few parts here, so the repayment rule is you will have 15 years to repay the amount that you withdraw. Okay? And is it mandatory? No. You don't necessarily have to repay or recontribute back to your RRSPs. Ideally, you do, because basically an RRSP gives you a tax credit when you file your income tax. The repayment rule only applies so that they don't claw back those credits.
Okay.
So what happens is if you decide not to repay or recontribute back to your RRSP, what happens then is a portion of that amount will be included into your taxable income
For that year.
for that year.
Okay, so let's break this down a little bit more. Let's say I'm a first-time home buyer and I saved $15,000 in my RRSP account. How am I going to repay that? Do I repay it like the year when I withdraw it, or after I buy the house, or when do I start repaying it, and how do I start repaying it?
The repayment rule for your RRSP actually will not kick in until the second year of owning the home.
Okay.
You will see this in your notice of assessment or with your tax preparer or accountant. And then repayment side of things, as long as you continue to contribute to your RRSP with your tax preparer or accountant in that matter, will then determine of how much of that annual contributions that you're doing will be put towards the RRSP repayment contribution, or is that going to be claimed as a new RRSP? As far as repaying, you will have 2 years after moving in. After that, you will have 15 years to repay whatever amount you withdraw.
So in my case, the example we use, $15,000. I use 15 for a reason. $15,000, I'll have to repay it 2 years after I move in, $1,000 per year. And if I do not contribute to my RRSP for that year, so we're 2018, I bought the property, I moved in this year, so in 2020, and in 2020, I decided not to contribute to my RRSP. What happens to that $1,000?
What happens to that $1,000 will be added in towards your taxable income.
Okay, yeah, so then my income will just be $1,000 more. For more information about this, it's also good to talk to your financial planner and your accountant. So the third thing that you have mentioned, which is more and more common these days, is the inheritance or gifting.
Yes, that's right. The third thing that we're noticing when it comes to down payment is where a family member or someone, a sibling, an aunt, an uncle, a grandparent, helping out their relative with the down payment in order to qualify for their purchase.
So you mean they're being gifted the funds. So
Yes.
let's say, you know, my children wants to buy a property, they're still too young, but if my kids want to buy a property and I want to help them out, I gift them their down payment.
Correct. You
And
can give them a portion or in its entirety. In regards to the steps with the gifted down payment, okay, there are a few things that we need to keep in mind. There's the Anti-Money Laundering Act that the banks have to follow. It's also known as AMLA. That's where it becomes a little bit more stringent for banks to just accept any money deposited into an account. And as far as the gifted down payment is concerned, there are a few things to keep in mind. The first thing would be they would want to see that the money is deposited into your account, for example, if you're the one receiving the gift.
Okay.
And the second thing that they would want to see would be the gift letter showing that, or showing the source of the fund, who it came from, and what the relationship is between the two parties.
So you said something earlier about the bank verifying the funds. So it's one thing for the bank to verify the funds going into the receiver's account in a Canadian institution. But let's say you are gifting me some money. So I will, do they need to verify your account as well as the person who is giving the money?
There are some instances where a bank would actually, or a lender would actually want to know where the funds are coming from, even if it's a gift. So for example, depending on the limits, depending on the situation, it's a case-by-case basis. That, for example, I'm your parent, I'm gifting you $200,000 for a down payment. Usually when it comes to that large of an amount, they would want to know where the source is coming from. So on top of the gift letter that we mentioned earlier, they'll also want to see the source. So for example, they might ask for my bank statement showing that that money is actually mine.
For more information when it comes to saving up for down payment, please feel free to reach out to us. We'll be happy to assist you. You can also contact your financial planner or your trusted financial advisor, and I'm sure they'll be happy to assist you. Thanks again for taking the time to sit down with us today, Christian.
Oh, thank you for having me. It was a pleasure.
And for more information about mortgages, you can reach Christian on his website or his email.